the year. And this year we have 4 of them scheduled, and they were all themed around how to impress investors. Earlier this year, we had 2 panels entitled, one was how to impress investors with your financials, and the other was how to impress investors with your startup's traction. Both of these were taped and are on our website if you would like to view them. Today's panel is how do you impress investors with your startup's team? Come November, we're gonna go a bit outside of the box, and our final panel of the year is gonna kind of turn the how to impress investors on its side and said, do you even need to impress investors today with all the alternative financing options out there? That should indeed be a provocative discussion. But back to today, and I'm very pleased to introduce and turn the screen over to Jen Laidlaw. Jen is the owner of TeamWorks, a talent development and consulting practice. She is also president of the Ann Arbor chapter of the Association of Talent Development, as well as being an NEF board member. Jen has done an absolutely swell job of assembling today's panel, and she's also going to moderate the discussion. Jen?
All right, thanks, David, for the nice introduction, and so excited to be here today. So how important is the team of your startup team to investors? I mean, we all know that a strong team is key to any successful business, and startups are no exception, right? You need a strong team that's equipped to lead, learn, pivot, listen, make tough decisions, and everything they need to do to drive a business forward, regardless of their business offering, the services that they're providing. So what are the elements of a strong team that will truly stand out to investors? What are investors looking for in a team? That's what we're here to talk about this afternoon. I'd like to welcome our panelists to turn on their videos so that everyone can see your faces. I'm excited to welcome our panelists this afternoon to talk about what each of them has learned in working with and assessing teams, and what helps them determine whether to invest or not as they look at the teams of startups. So I'd like to welcome our first panelist is Sonali Vijayvargiya. Sonali is the founder and managing partner of Augment Ventures. And Sonali, you want to just introduce yourself and tell us a little about yourself and Augment?
Yeah, hi guys, great to be here, and thank you for inviting me here on the NEF forum. I don't know how many of you know this, but eons ago when I wandered my way into Ann Arbor, I was on the board of NEF. So I know the great work that NEF does and the benefit that entrepreneurs get from great mentorship. So kudos to you guys and keep at it. So a quick introduction for about myself and the fund is, I moved here from India about 20 years ago. And prior, when I was in India, I was working in investment banking, doing M&A valuation, and also working with early stage companies, taking them to NASDAQ and Bombay Stock Exchange. When I moved to Michigan, really, I was drawn to the early stage work that was being done at the commercialization, at the tech transfer at Michigan State and University of Michigan and Wayne State. And, so I first got involved with the ecosystem here and started our fund Augment Ventures in 2011. So we are investing at the intersection of digitization and data, the new wave that is coming of transforming traditional industries, right? So that is what is exciting for Augment, and that is where we are investing. So I'm excited to be here and share a few of my experience over the years of how important the team is.
Well, thanks so much, Sonali. We're super excited that you're here too. What Sonali didn't tell you, she's the member of so many boards. She was a board member of Lamasoft, which a lot of us locals know. You're on the board of Big Brothers Big Sisters. That's amazing. So we're so excited to have you here, Sonali.
Thank you.
All right, so our next panelist comes to us from Detroit Venture Partners, Corey Tincher. So Corey, you want to introduce yourself and say a little about DVP?
Yeah, thanks, Jen. I appreciate it. And hello, everybody. Thanks for the time today. Quick note, I just want to say that actually Sonali had just committed to an investment in DVP after doing a ton of work and having a conversation with Sonali last week, we also made a commitment in that same company. Just yesterday, we let the founder know. So small world venture community in Michigan, especially, we definitely stick together. But anyways, it's great.
Thank you, Corey. I appreciate you. I'm looking forward to our ride together.
Yeah, likewise. Yeah, same here. So DVP. So I'm an investor at Detroit Venture Partners. We're the venture arm of Dan Gilbert's family office. Dan is the founder and chairman of Rocket Companies and a billion other things, and is heavily invested in the city of Detroit, both with his financially, but also personally, and doing a lot within the community there. And so Dan started Detroit Venture Partners about 10 years ago when he started moving all of his companies downtown. And we focused for the last 10 years investing for him, focusing mostly on industries in which we have deep domain expertise, like mortgage and prop tech, sports. He's the owner of the Cleveland Cavaliers. And we take a special interest in Detroit-based founders as well, because we're there and it's really important to us to support the entrepreneurial community. DVP itself is a stage agnostic fund. We're most often writing checks between $100K and $1 million into seed and Series A startups, but we've written checks as large as 30 to 40 million. And prior to my time at DVP, I worked closely with Dan for about 6.5 years. And in that time, I spent some time on the pro sports side of his office. I was a co-founder in a company based in Detroit called StockX with him. Did some economic development work, a bunch of other random stuff that will bore you, but it's been a good ride so far. And I've been with DVP for the last 2 years, running point on new investments for us.
Awesome. Thanks so much, Corey. I think in the event announcement, they called StockX like a unicorn that most of our audience is going to be familiar with. So it's great to have you here. And then our third panelist, last but not least, Suraj Moody-Jintala. So Suraj comes to us from Arboretum, which many local Ann Arbor folks are also familiar with. So Suraj, you want to say a little about yourself and about Arboretum?
Thanks, Jen. It's a pleasure to be here and nice to meet everyone. So, just to very briefly a little bit about myself. I grew up in New Jersey and went to school in Boston and ultimately ended up working in healthcare consulting for a couple of years, where predominantly I worked on healthcare clients, both private equity clients and corporate strategic engagements, and eventually wanted to transition into the investing world and wound up in Ann Arbor, Michigan with Arboretum Ventures about 3 years ago. So a little bit about Arboretum very briefly. We invest predominantly in healthcare technologies, spanning medical tech, life science tools, diagnostics, healthcare IT, and services businesses. And we don't really touch pharma too much, but in terms of, my role specifically, it's really to kind of lead diligence on a number of the investments that we look at and support our portfolio companies post-investment. So, excited to share what I've learned.
All right. Well, thanks so much, Suraj, and thanks to all of you for being here. Arboretum's been investing for almost 2 decades now, locally in Ann Arbor. So that's pretty awesome. So feel so lucky that you all said yes to be here today for this panel. And I have some questions for you to get our discussion going. But I wanted to let you know, if you're an attendee, you can ask your questions in the Q&A, and we'll get to your questions a little bit later in our panel discussion. So you all know today's discussion is about how to impress investors with your team. And so I think the first appropriate question is, why is the team so important to you when considering investing? So we'll start with you, Sonali. What makes the team so special?
Why is team so important? We are all here investing in new ideas, new concepts with incomplete data sets, right? Now, to make these products or service, to realize them, to really deliver it to consumers and have that impact, you really need teams to execute. You need team cohesion, right? We live in a dynamic world. There'll be changes in the economic model, there'll be changes in competition, and there'll be changes in the team. So you need resiliency. So that is why team is important, right? A resilient team, a cohesive team can track or can combat any change. And that's why we spend a fair amount of time that even if the concept is good, the market is good, but there is team cohesiveness or team passion is there to bring about the solution or this change, we say, okay, we can figure out the pricing, we can figure out the competition, we can do something. But that's why, according to us, we spend a fair amount of time just, getting to know the founder and his extended team as well.
Awesome, thank you. So Corey, I saw you nodding vigorously, so I'll let you go ahead and speak up next.
Sorry, I don't know that there's really much else that I can add because that was perfect. But yeah, I mean, at the end of the day, great ideas are worth nothing without execution. A great team, to Sonali's point, and to take that in a little bit further. I think that great teams, inevitably with startups, the road gets bumpy. Conditions change, variables change, markets, inevitably change, consumer interests evolve. There's new tech that's introduced that can maybe enable new consumer experiences. And at the end of the day, great teams recognize those opportunities or those needs, because in some cases, you may be in a position where it's just not working. But a great team that is on the same page, communicating well, it has enough self-awareness to have those honest conversations with themselves, will adjust and pivot and change direction if needed. And the other thing is that there is an absurd amount of luck that goes into a startup success that never gets talked about. You always hear the glorified stories in the media. You don't hear about all the right circumstances that came together at the right time. Timing really is important. But I think great teams minimize the amount of luck that is required for success and to achieve the vision. And so to us, it's definitely the most important criteria because we need, resilient leaders. To, Sonali's point, we need resilient leaders that will adapt to the changing circumstances and changing variables.
Awesome. So Suraj, anything to add?
Yeah, I think maybe two things that are somewhat incremental. I mean, I think one, the team is incredibly important to set the culture within an organization. And that permeates, especially as an organization grows. And it's actually, even from the investor and the board level, it's actually very evident to see how organizations change based on leadership styles and things like that. And kind of demonstrating, the team's ability to lead and the culture that you're building in an organization is incredibly important. One, and I think the last thing I'll add too is, startups are difficult. I think Corey and Sonali both, kind of touched on that. And one of the things that we look for in a team is just honesty, right? Do you have a high degree of integrity? And is that, that is a very strong signal as we do diligence to invest in folks that we can trust, because when things go bad, we want to know about them. We want to help. So I think, those are two other reasons I could add.
Yeah, awesome. So great answers. This is going so well, don't you think? I'm having so much fun already. Okay. All right. So my next question, there are, founders come with, some folks in roles. So what is, from your point of view, one of those key roles that's really, really important for a startup team to have, and why? So Corey, we'll start with you this time.
Yeah, no pressure. In my opinion, and maybe this is, from my own anecdotal experience, but one of the key, I think, roles to hire for early on as a generalist, you would expect that the founding team, in oftentimes outside of highly technical functions, most of the rest of the team, and it could just be one other person, but most everybody else is going to be picking up the slack everywhere else operationally. And so I think great generalists are usually great hires early on because they can adapt to circumstances and the needs of the companies and the team. And then the other thing is, in my opinion, great product leadership is important, earlier than later, because the product today and the way that the UI and UX comes together is absolutely a differentiator. in past decades, there was less of an emphasis on this because everything was so new in terms of digital and internet focused consumer experiences. But today, it's ubiquitous. It's everywhere. The proliferation of internet access is, it's off the charts. And so if everybody has access to something, having a great experience, the way that it comes together, that's really critical. And even if it's an enterprise focused company, having great product leadership is going to ease that sales process and help your sales team do their job more effectively. So those are probably the two things that I think early on, it's important to find the right types of leadership. And even with StockX, we did have we had a design co-founder from day one, and that was important for us because of the way that the experience was going to come together and be presented to the world. And so far, it's worked.
Awesome. Thanks, Corey. Suraj, any key roles that you like to see as part of that founding team or startup team?
Yeah, I think it honestly somewhat depends on the vertical as well as the stage of the company. But I mean, generally speaking, I agree with some of what Corey said. I mean, I think early on, I think a strong product development team is critical, and with some creativity and ability to adapt quickly, right? I think the other role that I want to see in conjunction to that is someone, and it could be, it could be the management team, it could be a specific person, a specific hire, but someone who has a good understanding of the voice of the customer and what the customer really needs in order to influence that product development, particularly in the earlier stages, because I think that's going to ultimately be critical to the company as you look to scale and grow the business.
Awesome. Sonali.
I think I agree with what both Suraj and Corey have said. I would put an extra double click on customer success. I think, generally, these are, early stage or any kind of founders, they are mission driven founders, and there is a product lead, and product lead or design is one thing, but a person who can lead the product and, grow it and scale it is a different kind of a person. But customer service somehow, gets sort of bounced around, even at an early stage, that, hey, we will split it between all of us and not with anybody. Actually, the responsibility and accountability associated with that role is missing, which leads to a lot of difficulties in holding on to the customers or developing deeper relationships and converting those initial interests into real customers, right? Converting these NREs or pilots into actually paying customers. And the number one job for a startup is to delight your believers, your initial adopters, your early adopters that are there. So customer success is very important, I think. The other thing that I think about, when we are looking at the team is, of course, you have few dollars to go around, but the message has to be delivered across to your partners, to your customers, to your investors. So I feel earlier on, they're sort of duct taping their way around with sales and marketing. And I think spending some time on that as well, and more so, even if it is divvied up between, the 4 founders or 4 team members or whatever, building that structure of accountability, like what does it mean? Like, what are the outcomes that we are hoping to achieve by doing a certain activity? I think, again, builds that cohesiveness of what the company is about, how you're managing team. And also it instills a sense of belonging, right? Everyone feels that, hey, my action, even though I'm wearing 4 hats today, and I'm, a customer service person today, and I'm marketing, I'm working with the ad agency, and as you build your team, you will add people to exclusively head and manage those functions. But I do think customer service, customer success is an overlooked part in startups, in not just from headcount perspective, but accountability and delivery.
Yeah, great insights from all of you. Thank you so much. My next question for you, how much previous experience is enough? So when you're looking at that founding team, how much previous experience do they need to have, or how important is that? So Suraj, I'll start with you if you want to share your insights there.
Sure. Yeah, I think I would rephrase the question a little bit personally. I mean, I don't really like to think of how much, rather I like to think of quality, right? So for example, we were looking at a bariatrics company earlier in the year and spent a lot of time with the management team and, found that a lot of their experience collectively was at one of the large bariatric manufacturing companies and in medical devices. And, none of them had, grown a startup from zero to, et cetera. None of them had sold like a $500 million company or anything like that. But they all had an extremely deep domain expertise on what are the needs of that very specific segment of surgery, right? So I think how much is one thing, but I think the quality of experience, particularly in the domain of the startup, as well as even some of the things that are a little bit harder to quantify, like how many people, how many experts, or how many academic centers of excellence in healthcare does the team have direct connections to, right? Or things like that that are a little bit more nuanced. I think how much is a little bit opaque. So I think quality and depth of experience certainly something that we look for across the management team.
Awesome. Thanks, Suraj. Corey, I know when you and I spoke earlier, you had some interesting things to say about how much experience is enough, or like what Suraj is saying, depth of experience, all that good stuff. So what are your thoughts?
Yeah, I think I completely agree with what Suraj said. I think that at the end of the day, the experience itself, if it's relevant, it subjectively de-risks and or subjectively partially de-risks investment for investors. It takes one thing away that you may have concerns about if somebody has very relevant experience that can contribute to the success of the business in meaningful ways. And the examples he gave were great. That said, I also think that it's important to know that experience is also not necessary to be a successful founder. From an investor standpoint, it helps us. It gives us more confidence as we're working through a diligence process. Because again, it's as we get to know the team, it's one less concern we might have if there's a team that has well-rounded skill sets and well-rounded experience sets that ultimately can benefit the business, but it's not, necessary at the end of the day, truthfully speaking. And I can give, the StockX example again. I mean, the co-founding team that we had, of course, we had Dan, who was wildly successful, but let's strip him out of this for a second and consider the rest of the co-founders. Myself, being focused on basketball and NBA stuff, had never built a marketplace in my life. And the product co-founders that we had, they'd just shut down their previous startup. They had raised $500K and decided not to go out and raise again. And so they stopped. So they did have startup experience, but it was unsuccessful by conventional terms. That said, and nobody had ever built a marketplace. Nobody was a sneakerhead. But great teams adapt, great teams with well-rounded skill sets, and excitement and passion for an idea can be successful. So while I think, when I put the investor's hat on, experience to me, especially if it's deep experience that is related, and if you looked across a team, the collective experience for the team, can give you some sort of confidence that that experience will help them be successful. That's great for us because that makes our job easier. But, for founders in the audience, it's also not necessary. So you don't have to go get a job before you work on that idea that is just keeping you up at night. You can also just do it and build it. And, your success will be defined by, you and the work that you put in and how you execute.
Yeah. So Sonali, I see you nodding to what Corey just said. So you want to share a little bit about what you're thinking?
Yeah, the way I think about experience is there are two ways. It depends upon what is, if you're doing a drug development, if you're doing a deep tech, if you're trying to create a new epi, a new chemistry, you need to have a PhD in that, and at least an experience in that, or worked at an institution which provided you with the knowledge or to execute that. So for deep tech, fundamental research-based startups, you need experience either in academia or in the industry. There's no going around that. The other part of it is that even in deep tech, let's say, you have been an outside observer to how they are approaching things, and you come up with an idea, and then you build a team of advisors and people who will execute on your concept or an idea, and you can get faith that, hey, if we pursue this approach, we are going to make substantial amount of progress in the delivery of product and service. That would be very valuable. But just like what Corey said, we have at Augment Ventures, we have funded PhDs, and we have funded young entrepreneurs, coming out of their graduate schools, really coming up with an idea and creating a very, very valuable company. The idea, why did we back them? They were students, they just got out, 23, very scary looking. I'm not pretty sure they were shaving yet, but why did we do that? Because they were passionate. They were passionate about the ideas. They were not fearful of lifting up the phone and calling these random people and getting customers to buy their stuff or believe in them, right? So that also has a value in an investor's head, or how they make decision. And it is all about, what are they trying to create? I mean, is it something, they are going, and that's where, what we talked about earlier on is this team or this bunch of guys and girls are going to stick together and actually turn it into a company, or this was a project and, hey, it was sort of cool and now I'm out from here, right? I mean, every business school has tons of business plan competitions, and many companies get formed, but come placement time, most of them get abandoned and they all go in a different way, right? But some folks will stick together. Young team, not experienced, very blue-eyed. And so that is an attractive part. That's why I was nodding to Corey, is that to the entrepreneurs in this group, that ideation has a value, right? And then executing on that and developing your team and creating, your own tribe and followers, so that leads to success. So ideation is just not enough, but is an important part and should not be neglected. And that can come to an experienced person or completely someone, like we have entrepreneurs that we have backed came from a completely different industry, and they decided, hey, this is, new growing industry in renewable energy. I want to be part of this and I'm going to create a solution. And they pivoted many times, but ultimately delivered success.
Awesome. So that's inspiring, I'm sure, to a lot of our younger audience that is thinking, how am I going to get experience if I don't have any experience, right? And so appreciate the perspective from all of you on that. All right, my next question, and just, having been a member of NEF now for a little bit and been on some coaching teams and seeing the teams that some of our entrepreneurs have, sometimes we see family and friends as part of their team. And so just want to hear from all of you, is that a good thing? Is that a bad thing? Does it depend? What role do the family and friends play, and how do you think about that? So I know, Sonali, you just talked for quite a bit, but I would love to get your thoughts on family and friends.
Yeah, everyone should have a prenup, like, hey. So, few years ago, there was a little bit of a stigma, if particularly husband-wife teams or brothers or sisters, or, sort of where they were closely integrated into a product or a solution, like they were really driving it. However, I feel that stigma has eroded a little bit, and more so because I think people are realizing that, when an investor gets confidence on how the team is constructed, like what value each member is bringing to the table, then, I think they are able to not overlook, in fact, they believe that the strength in the team, because they have seen cycles in their life go up and down, they will be able to stick together and bear the challenges of doing a startup through various economic terms or, personal life terms. So I think if a team can demonstrate the value that each member it brings, I think if you're leveraging your uncle who's a CPA and he's doing your accounts sort of is okay. But at what point, would you build your team to make sure that each one is responsible and cohesiveness of the team to deliver the product and build the company? So I think that's sort of important.
Awesome. Suraj, anything from your experience about family and friends being part of that founding startup team?
I don't have much experience in terms of seeing teams with a lot of family firsthand. The only thing I'll add very briefly is I think just from an investor's perspective, and I touched on this earlier, the first question you asked about just the general perceptiveness and kind of the ability for investors to kind of detect things kind of at the boardroom level and understand kind of, if interpersonal things are kind of getting in the way of progress, or if they're, if something's going on, I think it's often pretty evident, I think, to investors. And I think that, just being forthright of, these are the relationships that exist in a company and et cetera. I think that's very important. But again, I don't have too much experience in that, so I'll maybe pause there and let Corey jump in.
Well, I've never worked with any close family or with my wife, but I would definitely work with my wife. I think she'd be a great co-founder. She's definitely a CEO of our household and family. But that said,
is she sitting right there? That's what my suspicion.
No, she's not. I would say this if she wasn't even in our house. I promise that. But I've seen both sides of this. I've seen where it hasn't worked, and I've seen where it has worked. And at the end of the day, it can absolutely work. It comes down to a lot of the same things that make great teams great. You have to already have a lot of that stuff in you. Like Suraj was saying, you have to be a person of integrity. You have to have a strong moral compass. You also have to be a great communicator. That, more than anything is really critical to people that are close with each other, whether they're, spouses or partners or just friends or family. You've got to be able to communicate with each other. And, a great litmus test we look at is how somebody responds in a conversation if they're asked a question like, could you fire this person? And that's something you have to be prepared for if you're going to go work with somebody that you're really close to, because those are situations that do present themselves in companies early on, especially. But we've certainly seen it work too, both with spouses and just extended family or close family. And so, if you just have to be great communicators, and you have to already have all the right stuff, the good stuff. That is in your nature as a human in order to be successful in those situations.
I'd like to just add one more element here. I mean, when teams and companies are formed, generally particularly early stage younger entrepreneurs, they're going out to their buddies and say, hey, I have an idea. And even in that construct, it is very hard what Corey was just talking about, right? What are their roles? And as you evolve, and fortunately or unfortunately, because these are all young entrepreneurs, some of them are able to grow and some are not. And it is very hard. And unfortunately, I've witnessed a few things in my, gosh, I don't want to age myself here, but a few years of career, let's just say like something around 20s, that, it's a hard thing, right? I mean, you have to reassign. I mean, he started off as head of product development or head of product, and the company has gone beyond your buddy ability. And those are hard decisions. And therefore, when you are a team, you're a good constant communication and making them aware. I think you should mentor and give opportunity to people to develop, but sometimes it is not possible. And then finding and reassigning that person to think about it that, oh, it's not like you're positioning that person for success, right? The idea of a leader or CEO of a company is to position everyone for success. And so if that position is not working for your fourth founder, unfortunately, it is your job to reassign and make sure that that person is successful and feels that, he's part of the story versus, always failing at the assignments given to that. So these are very hard things, whether it is your, family, spouse, or really your, 4 buddies that came out of the same program.
Yeah, I teach on how to, give effective feedback to people that are not related to you, right? And to do that to people that you have emotional ties with. Whew, that's tough. That definitely requires some maturity and integrity and all kinds of other extra skills. All right, so my next question for this panel. You all are just brilliant. I thank you so much already for sharing all your insights. It's awesome. How important are the advisors to you? I know sometimes we get our teams get so excited about the advisor team that they're bringing in. How important is that to you? So Corey, we'll start with you.
Yeah, to me, it depends. If your deck is 4 slides at the end of all these advisors that you've got committed, I don't know if that necessarily moves the needle for me unless they're relevant advisors that are opening doors and helping you, succeed in some manner. In some cases, or in a lot of cases, advisors could be valuable sales partners to you. They can open doors. They can get you in the at least into the first meeting and help you, grow at least from a your revenue in some of those cases. In other cases, maybe they're, they have great relevant experience and have built great products before, and maybe they can help you avoid some of the pitfalls that they experienced at those companies. But just having a full roster of advisors, especially if they're advisors that don't have relevant backgrounds, to be completely candid, that doesn't really do a whole lot for us. It's always going to focus more on the team itself. And so, yeah, it's completely case dependent. But we would want to see advisors that are, adding meaningful value to the team and helping grow the business, as opposed to just being included on, slide number 11 in your deck.
Yeah, that makes sense. Thanks, Corey. Suraj, anything to add to that?
Yeah, I think, I'll take a more of a healthcare lens when I answer this question, so it may not be applicable to everyone. But I mean, I think advisors are particularly important in our industry because, if you're a device company or a tools company with a highly technical product and you're selling into, research labs and academic institutions, I mean, these are really sophisticated customers that will look for someone of excellence to be kind of championing the product or some sort of proof point that will help you sell. And that could be in the form of, someone who's running a very prominent lab in the space of something that you're selling, or, in the case of a medical device, maybe kind of the academic leader of the specific, indication that your device is looking to address. In that sense, it is very important. And I think having a strong advisory board that's also diverse in experience is important, because if you have, touched briefly on the product side, but in terms of a regulatory side and navigating the challenges of going through FDA in particular, or understanding how products are reimbursed, having someone on the advisory board that has that lens of market access is also important. So I know that answer was a little bit healthcare specific, but it's just something to keep in mind there that I'm sure is somewhat applicable to other industries as well.
Yeah, thank you. Snelly, anything to add?
I just say the differentiation is between deep tech, where you need, deeper understanding of trends, which are more deep science based. I think there, if you are, creating some sort of a semiconductor solution or an epi or something of that sort, then, you see that who else is willing to attach their name to this product or solution, right? I mean, these people are of great repute, right? So I think like Corey and Suraj already said that, it makes a difference when person of that repute comes to them. But most of the times in the kind of industries, and what Suraj just said, it's very, very true for healthcare industry, but the kind of industries that we normally invest in, I think we spend a substantial amount of time on the core team, and it's kind of good to have advisory board unless they are just, very, very specific and core to your operations. I don't spend a lot of time Googling the advisors or looking at their LinkedIn profile unless I'm first impressed with the team.
All right, thank you all for your insight. So I just want to remind our audience, I can see a couple questions already coming in the Q&A, but if you have questions for our panel, you can add them in the Q&A and we'll be getting to those soon. My next question for you all is, are there red flags that you look for when you're assessing the team? Any red flags that come to mind? So Suraj, I'll start with you since you're nodding already when I ask the question.
Sure, sorry. Yeah, I think there are a few. I already mentioned one early on in terms of integrity, so maybe we'll skip past that for now. I think one of the things, when I first joined Arboretum several years ago, one of the partners kind of made an interesting analogy to the due diligence process of, it's basically like you're dating, right? You're basically dating the investor and the company they're dating, they're getting to know each other a little bit. And the person that you portray yourself as while you're dating, it's going to be the person that you marry, right? That's kind of, and it should be the best form, right? So for example, if I'm doing diligence with a company and I see a general lack of a sense of urgency in terms of getting things done quickly or kind of not knowing the numbers of their market or having financials that really are kind of out of sync, that to me is not just indicative of, it's more indicative of what would happen post close, I guess is my point. And I think, so very specific red flags, I mentioned a couple, right? Kind of lack of urgency, just kind of working very slowly through things, generally having extremely unrealistic expectations is also kind of a red flag, right? A lot of the times when I see decks that kind of look something like this for your sales, I understand that I understand that some of that is aspirational, but try to be realistic, because a lot of times I get decks that are just draw a lot of skepticism. And then I think just in terms of the actual presentation when you pitch to investors, just making sure that you're very clean and someone should walk away from a presentation and be able to very succinctly within a couple sentences tell you about your product and the need that you're fulfilling. And it's actually surprising how difficult that can be when you get really caught up in the details. So, I think those are some red flags, but I think using the dating analogy is something that I've kind of kept in the back of my head over the couple of years.
Yeah, thanks for that. I know when you're dating someone, right, you get the best of them, right? And then once you get married, you get the whole thing. And hopefully you're not too unpleasantly surprised, right? But if you see those cracks when you're dating, you should pay attention for sure. And Suraj, I really appreciate how you said about the pitch, because I know an organization that helps with that. So it happens to be us. So thanks for the unwittingly giving us a plug. Appreciate that. Corey, anything to add about red flags that maybe you look for or think about?
Yeah, it's less about maybe in this case for these couple of things looking for rather than noticing. Poor communication, evasiveness during, whether it's passive communication when we're emailing or texting, or in meetings when we're, having follow-up conversations with founders or the initial pitch, and maybe they're beating around the bush, or they're not, necessarily getting to the point, or they're avoiding the point. A lot of times, I think the most humans can probably sense those things. They can tell when somebody is just kind of BSing their way. through a conversation. And that's definitely a red flag for us. And then the other thing is just like having a good BS meter, being able to tell when somebody is maybe, doesn't have some of those qualities that you would want in somebody, and you can sense that either directly or indirectly. One time, this is years ago when I first started working with Dan, he told me that you can never do a good deal with a bad person, and I think that that's inevitably true, and I've seen that both in practice and in good ways and bad ways, and so if you have if your gut is telling you that this is not the type of person that you'd want to be in business with. And to Suraj's point, like, it really is a marriage. Both, if you're a founder and you have a co-founder that you're recruiting, that's going to be a marriage. And it's the same thing on the investor-founder relationship. I mean, if you're, as an investor, we believe in the team. We want to put money, obviously, behind the team to execute on their vision, and we want to do whatever we can to help them. So we have to be able to work and collaborate harmoniously, for sure. In most cases, like, you probably have a gut level instinct around the quality of the person, and if you have a sense that they might not be up to par or standard that you're expecting out of somebody, then maybe that's a signal for you. But yeah, it's there's a lot of those things: the communication, the evasiveness, not knowing the numbers, not understanding the market. And by the way, if you don't know the numbers, it's better to not try to fake it. It's better to just say, or whatever it is, whatever the question is, like, just let the investor know, like, I'll get back to you on that, because I don't have it off the top of my head right now, rather than just sort of like, because you can always tell when somebody's making something up. Anyways, I'll stop there, but yeah, those are the couple things that come to mind.
Yeah, Sonali, anything to add?
I mean, I agree both with what Corey and Suraj just said. I will add to it, when they are not introducing you to their extended team, sometimes they're solo founders, but if they're not introducing you to their other founder or other team members, and you're the one who's doing all the presentations, technical things, that's a massive red flag, right? This is a community business. You need believers to believe in you, right? And if you couldn't recruit other people to join your vision, that's challenging, because so that's one thing. The other part is, when we do reference check, if it is slow to come by, then again, like, what is happening is, so those are the other two things I would add to it, that when we don't get a chance. And the one more thing I would add here is, and it just recently occurred to us, we were looking at this company, early stage company, they had one pilot customer, and we said that, okay, it is an early stage company, we understand that. We'd like to talk to your, first customer as to how they are using this particular solution and product. And they were very cagey about giving that. I mean, they were building up this big vision that how awesome this customer is and how deep they can go and how many millions and billions they can get from this customer, but they didn't make the introduction. So I think, and they were just like, hey, we'll share emails, but we'll not introduce. So I just think that if you are particularly trying to raise money from a venture capital, firm, then one of the big due diligence thing is team diligence, partnership diligence, and reference check. And they have to be done very easily, and they should not feel that you're holding back information. I think that's a massive red flag.
Awesome. Yeah, that lack of transparency. Yeah. All right, so I wanted to get a couple of questions from our audience. So John has asked a question. He says he has a partner that complements his skills. How many other people do you need to have as part of the team to see it as a worthwhile investment? Anybody want to take that one?
Sure, I'll start. I think it's less about number, to some of the points that were made earlier. It's more about I think the quality of the team, and also what those skills are. That complementary skills mean a lot if they are skills that are relevant to the business that you're trying to build. Like for myself, if I were trying to co-found a new medical device company, anything outside of somebody that has medical device experience probably isn't going to be attractive to investors, because I don't have medical device experience. And so I'm coming into it cold. And so I think the skill sets if they're complementary, that's great, but they should be relevant to what you're trying to build and the market that you're building into. And then, again, it's less about quantity and more about filling necessary and important or critical skill gaps. And so, you guys have to make that assessment. But at the end of the day, when you go and talk to investors and they talk to you about your roadmap and what you're building, like, you should have a plan for how you get there. And if you don't have the relevant skill sets, behind you today, go find those people that can help you actually get there and build those things that, you're talking to investors about building.
Awesome. All right. Thanks, Corey. All right. I have another question for all of you. Would you prefer an A plus product with a B minus team, or a B minus product with an A plus team?
Well, that's an easy one. Definitely an A team. Definitely. Because you never know when that product will turn into an A, but an A team will always be able to turn a B product into an A product.
I see lots of nodding. So I'm guessing Siraj and Corey, thumbs up. You agree? The A team?
I think for the most part, yes. Maybe the one caveat that I'll add to that is, again, if it's a extremely, so for example, I guess I'm thinking specifically of life science tool products, or Sonali, you mentioned kind of B2B products. I mean, I think in those unique cases where the product needs to be above and beyond a certain, a services business or a generic product offering, I think that might be the one exception. But in general, yes, I agree.
All right. Another question from our audience. Is intellectual property helpful, very helpful, or mandatory?
Again, I would like to put a little partition between deep tech and other solutions or business models. Business models are very important. How you sell your stuff differentiates you and can create that moat and that idea and concept. And it is good to have, but if you're only going to latch on to that, hey, I have the IP, and not do the rest of the things that are necessary to build a company, that's not going to be adequate. So that's my take on it.
Yeah, I would say that IP is more often mandatory than not in my industry. I think the exception could be if IP would actually be damaging to the company. I mean, there's sometimes you want to keep trade secrets, whether it's secrets in manufacturing or things like that really are just better kept inside the company. But for the most part, in healthcare, med device, and life science tools, I would say it's mandatory.
Awesome. Thank you so much. Believe it or not, oh my gosh, we're out of time. So to our audience members that asked questions we couldn't get to, I'm so sorry, but if you come to networking, you might get your question answered there. And I just want to thank our investor panel this afternoon for just sharing their insights and experience with our NEF community. I know you're very, very, very busy people. I know you are. And so your support of NEF and being here today and sharing your experiences is just so important and so appreciated. So on behalf of myself and the NEF board and all of our attendees today, thank you, thank you, thank you for being here. Paul, I'll turn it over to you.